From the very beginning, we knew climate change was financially material. What we didn't have yet were the tools, the language, or the policy certainty to act at scale. IGCC helped create that shift. Today, its members manage over $5 trillion in assets, safeguarding the retirement savings of 15.8 million Australians.
When I came in as the inaugural CEO of the Investor Group on Climate Change in 2005, climate science was still being hotly debated in the general media. What's still underappreciated is how early Australian investors moved. IGCC was built by a powerhouse group of visionary investors, including Vic Super, AMP Capital, Catholic Super and BT Financial. We had significant climate-exposed high-emitting sectors, and we have one of the largest superannuation systems in the world, which requires long-term thinking. That gave us a reason to look ahead and act early. The founding committee understood and recognised that climate change was real and that it had the potential to impact financial returns to their beneficiaries.
Turning that traction into lasting influence, especially with government, would take persistence, discipline, and a long-term view.
So when I came into the IGCC, the investment community was just deciding that they were really going to step up their efforts on climate change. The world was watching the UN Climate Summit in Copenhagen. There was hope for a breakthrough, but when the talks collapsed, disappointment was global. And the political temperature at home changed too. At the time, we were focused on carbon pricing and building real traction with the government. In 2010, IGCC convened the Investor CEO panel on climate change, bringing together 9 of the most senior voices in Australian finance, representing over $350 billion. It was the first time Australia's most senior investor voices joined forces publicly to push for policy certainty on climate. And in 2011, carbon pricing became law, a signal that investor voices were starting to cut through. But the fallout from Copenhagen cut deep. Bipartisan support fractured, and the climate debate became increasingly polarised.
Your statement today calls for stable long-term policies to give clear signals to investors, yet we have the opposition who, by any reading of opinion polls, will almost certainly win next year's election, saying that the first thing they're going to do in government is repeal the carbon tax. Does that mean that there won't be certainty for investing in Australia, at least until the next election?
It means that some of the bigger bets in the energy sector are being put on hold. There is uncertainty out there at the moment. We've just got to call it what it is.
As political resistance dragged on, IGCC didn't pivot. It doubled down. And over time, that discipline started to move the system.
We always framed climate as an economic issue. We weren't just speaking louder, we were speaking in a language policymakers understood. It wasn't just about ambition, it was about risk, regulation, and capital flows. That idea that investors need certainty, we created that. That climate is a systemic risk to the economy, that came from us. And whenever there was a vacuum, when government stepped back or the media got stuck in ideology, the investor community filled it through IGCC. And it was a voice people didn't expect in this space. We weren't activists, we weren't partisan, and that made it all the more powerful.
By 2015, the broader system began to echo what we had been saying for years.
First came Mark Carney, Governor of the Bank of England in 2015, warning that climate change posed financial risks that markets were ignoring. Then in 2017, Jeff Summerhays at APRA made the regulator's position clear. Climate change wasn't just environmental, it was a threat to financial stability.
In parallel, the Hutley legal opinion was released in 2016. It confirmed that company directors had a legal duty to consider climate risk if it was financially material. That reframed the conversation. It wasn't just about whether you could act on climate, it was whether you had to.
And suddenly, the same lines that we worked so hard to land around fiduciary duty, investor certainty, economic risk, were being quoted back to us in the media, in ministerial speeches and on the floor of Parliament.
Rebecca McCullough-Wright, the CEO of the Investor Group on Climate Change, said, "Policy uncertainty has been the biggest handbrake for long-term investors who are ready to invest in economy-wide decarbonisation."
One of the clearest signs we were cutting through was the Senate inquiry into mandatory climate disclosure. We advocated for it and it landed. That influence became visible in 2022 when the incoming minister chose IGCC's annual summit stage to confirm the government's plan to legislate mandatory climate disclosure.
By staying disciplined, we help move the climate conversation from the sidelines of policy into the core of how financial systems understand risk.
If climate risk was global, the investor response had to be too. IGCC helped secure Australia's place in those international conversations.
For an Australian-based group, we really punched above our weight, and that was strategic. We knew that if Australia wanted to stay relevant, we had to lead.
IGCC didn't just join international coalitions, we helped build them. We were founding partners in initiatives like Climate Action 100+, which is now the largest ever global corporate engagement initiative. These partnerships weren't just symbolic, they helped set global standards, and they've really stood the test of time.
Our global presence gave us real weight in Canberra. When you're helping shape the international climate finance agenda, people start to pay attention at home because they can't afford not to. That contrast from the global stage to the halls of Parliament is what made IGCC effective. So one of our most important contributions was the re-establishment of the Asia Investor Group on Climate Change.
We saw that Asia would be critical to the transition. AIGCC gave us the ability to connect investors across Asia Pacific and bring Australian capital into the room where regional policy was being shaped.
Over 2 decades, we helped change the way climate risk is understood across investment, regulation and policy. We built the relationships, the tools and the language, and we gave investors a credible voice. But now, that voice is being asked to go further.
IGCC was built by investors for investors. And now we're being asked to lead, to go places others can't. We can act where individual institutions might hesitate, and that gives the whole system more room to move.
Australia has one of the most active climate policy landscapes in the world. That's not just pressure, it's a once-in-a-lifetime opportunity, and Australia is so well placed to lead. If we fall behind, we risk missing out on investment and failing to deliver the long-term returns our members rely on. At the end of the day, that's whose future we're managing, the retirement savings of everyday Australians. Superannuation and pension funds are not just numbers on a balance sheet. They are the backbone of our economy, the engine of investment here and globally, and a powerful force that will shape the world that we and future generations will retire into.
Through all the politics, the pressure and the policy swings, IGCC never lost its core message that climate change isn't just an environmental issue, it's a financial one, and that investors have a responsibility to act.
IGCC was established to do a job and cease once it was done. And while we're not there yet, 20 years of persistence has created real momentum. The next chapter is ours to shape.